Hey traders, Akil Stokes here, Trading Powered, and wanted to give you a quick middle of the week video. Now usually in my weekend review videos we're talking about charts, structure analysis, technical analysis, the whole 9 yards. In this one I want to focus mainly on psychology, and well, as you know, we're coming off a monster week and a monster month in the live room, and I've been getting a lot of questions from traders, a lot of comments, and a lot of shared stories about, hey, I'm making this mistake, I'm making that mistake, and just wanted to kind of give you guys something to hopefully help out with that. Now, we do have the Technical Trader Workshop coming up soon, where we're going to touch on psychology quite a bit, but also I think there's a lot to be had out of the video I'm going to show you in a few minutes, which is actually a recap of last Wednesday's session in the live room. Not a recap, but actual live recording of one. And I was reading the Wall Street Journal this week. I don't know if you guys can see this, but I read a nice article about the 7 deadly sins of investing, and this really sparked my my interest because I had just read an email from a trader friend of mine. Wasn't the best email, but it was basically saying, hey, I'm good with technical analysis. I've been able to grow my account. I can trade well. However, I keep blowing it. I keep making that 1 or 2 crucial mistakes that blow my account. And the situation that trader was in, he was about to blow basically his 5th account, and it all comes from a simple mistake, either made by overconfidence or, you know, who knows what it was. And if you want to be a consistently successful trader, it's not about being able to read the charts. It's not about coming up with a strategy. That's the easy part. That could be taught in, you know, 2 to 3 months. The hard part is the psychological part, the 6 engines that rest between your ears, and following that plan over and over again, following it when the market's doing well and you're making money, not getting greedy, following it when the market's doing bad and you're losing money, not getting depressed. So hopefully in the live room recording that I'm about to show you, we touch on a little bit of trading psychology. Obviously nothing as much as we do in my course or anything like that, but I thought it would be helpful for you guys out there, because I know this trader that Facebooked me, he's not the only one feeling like this. Shoot, I did the same thing a few times while I was on my trading journey. Is it embarrassing? Yes, but on the positive side, I think it's, you know, going through those bumps and bruises and blowing accounts and making big trading mistakes where you have a great month and then you lose it all. It helped me to become the trading educator and trading coach that I am today. So every time I get a chance to share my experiences with you guys, or show you an opportunity where I really focus on psychology, I want to share it with you guys. So I hope you guys enjoy this video. It's from last Wednesday in the live room during one of our biggest days, and I'll be back in a little bit at the end of it to recap things. All right, traders, back. And well, pound dollar, the bat pattern, as you can see, came and hit target 1, so I quickly got my stops to break even. We banked about what, 60, probably about 75 pips on target 1. So congratulations for that. You're not going to get any applause because that was a pretty pain-free trade, but I am going to give you this, and it doesn't, I know this trade doesn't count for the live room, but it's been a great start to the morning, so we might as well give you a little victory music for that. Light 'em up, up, I'm on fire. Oh, that never gets old. Also because it means we're making money. But good stuff. Good stuff. One thing I do want to say about, now, if you're shooting for, a couple people mentioned, Saeed said, just realize how much pound yen is up. Now, some of you got out already, either targets at the 618, 786, or at structure right here, which is nothing wrong with that. I told you guys earlier, I'm shooting for extended targets on this, looking for the 127 inversion. Now, there's a good and a bad to shooting for higher targets. Obviously, the good is when they get hit, they make more money. More money makes you happy, or more profit. Even though we're not trading for profit, technically we're trading for execution and to execute our trades the right way, and profit is the result of that. Um, but we all like a little more money in our wallets. But here's the bad thing. You have to sit through a lot of pain, and we touched on this a little bit earlier. Look where we're at right now. We took this trade earlier because of what? We came down to a major and minor DSR level. We had some nice divergence on the RSI, thanks with the hint from Alfonso. Appreciate it. And we rolled up. Look what we're doing now. RSI massively overbought. We're sitting at came into about 90. We're at a major and a minor DSR level. It looks like we're about to come down and double top. We're getting the exact, not the exact, we don't have the harmonic move, but we're getting a similar setup on a similar setup going the opposite way, and this can very well be a short opportunity. Matter of fact, this is a pretty good short opportunity right now. If I weren't in this trade, I would look to take this short. So you're going to get these conflicting signals whenever you take, not whenever, but a lot of the times when you shoot for extended targets, especially if you're using the 127 inversion, you may get conflicting signals, and you're going to have to tough it up and sit through it. You're going to have to ignore this. You're not going to have to get scared out. You're going to have to sit through it and say, well, my higher time frame analysis says that this market should push up. I'm going to stick by that and have confidence. And this we may double top, boom, up here, come down, retrace all the way to this structure level right here. That looks like a nice level, and then shoot up. And you're going to have to deal with that. But to a newer, unexperienced trader who hasn't really took their bumps and bruises and punches to the guts, this could be hard to do. This could be very hard to do. And this is really why we have target ones. Target ones, we set target ones not only to get some money off the board, to say, hey, I padded my pockets a little bit, but mainly for the psychological aspect. I mean, give me a yes if anyone's still in this trade. No, I have to be the only one. Is anyone still in this trade? Please, somebody. I'm the only one. Okay. Let's pretend you were still in this trade then. Yeah, no one. You've all bailed on me. And of course, you'll let me hear it if this thing comes down and stops me out. But let's pretend you're in this trade, right? Let's pretend you're in this trade. You took target ones off already. Or let's take the pound dollar trade. How nervous are you right now? Is anyone nervous? Is anyone nervous either if you put yourself in my shoes in this trade, or maybe in the pound dollar trade where we hit target one for whatever 70 pips and we're waiting on target two? Anyone a little scared, a little nervous about their second targets? If you're not, why not? Why aren't you nervous? Why aren't you scared? You're usually a little scared when you enter the trade, right? Exactly. Because it's break even. You can't lose. You can't lose money. All you can do is get more. That's one of the main reasons we want to have those target ones in a safer position, a position that we assume is going to get hit. Because once we get those off, it's a pain-free trade. And that pain-free feeling is going to allow you to shoot for extended targets if you choose to. Because the biggest fear of trading is losing money. The biggest fear of trading is losing money. This is like the last round in bowling. That's a horrible example because you can't lose points in bowling. But it's like a bonus round. You can't lose money, and you got to think about that to help you stay calm psychologically. So stick with this trade if you're in it, even though you guys bailed on me. You guys should have told me you were all exiting here. I would have exited too. No wonder the market's pushing down. But seriously, having those target twos, once you get that target one off the board, once you move those stops to break even, or in this case you trail them a little bit, it should be pain-free. You should be able to shoot for those higher targets and really not get bothered by something like this. So again, good stuff on that pound yen trade for those who took it. Good stuff on the pound dollar trade. That's still in progress, and we're seeing a little retracement right now. And you can call it luck, you can call it skill, but we made money. That's what matters. You know, I don't trade fundamentals. So you can say that, oh, we were just on the right side of the market. I have no idea what Carney said. All I know is we entered based on our technical analysis. We put entries and stops based on our technical analysis. The market had an initial reaction, if you remember, that went against us. If I look on the range bar charts, you can see it right here a little easier. We were trading here, right? Boom, 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 boom. News came out at 8:45. What'd the markets do? Boom. 1, 2, 3, 4, 5, 25 pips straight against us. What held? Structure. So screw all that fundamental stuff. Structure held. And you'll see this over and over with these news announcements. The market will push and move off a fundamental announcement, but it'll stop at the technicals. So, all right, now I'm fired up. Let's see. We had someone mention a possible pound dollar cipher on 15 minute. Let's take a look at that. Because remember that bat pattern, that's higher time frame. And yep. Okay, so I hope you guys enjoyed that video. Obviously, it's not the same as a training lesson where we're going step by step on how to trade you to be a mentally tougher trader and whatnot. But it does give some key points if you listen closely on ways to help yourself out while you're in the market. Now, with the Technical Trader Workshop, with less than a month away, and piggybacking off the email I got from this guy or the Facebook message, whatever it is, do me a favor, guys. After you like and share this video, of course, if there's something that is bothering you in trading, feel free to comment underneath this video. We'd love to see what your biggest struggles are. So when that Technical Trader Workshop does come, we can make sure to address that issue, especially if it's something that's common amongst the thousands and thousands of traders that will be there. So until next time, traders, plan your trade, trade your plan. That's the most important thing I can tell you, and I'll see you later in the week with this week's Live Room Weekend Review. Take care.